Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for Alphabet Incorporated, stock ticker GOOG. Of course, this is the Google and YouTube parent company. So recently, Alphabet, Google just released earnings. The results were mostly in line with analyst expectations. There might have been a miss of about a penny on the earnings side of the equation. Overall, this was roughly in line with what the market was expecting. There was a little bit of weakness in the YouTube segment itself, but overall the weakness was not pronounced. So the question here is really, why is a sell-off actually occurring? This is the 4-hour chart. So, if we were to drill down a bit more into, say, an hourly chart or a 30-minute chart or something like that, this decline would look much more pronounced. This is a fairly steep movement lower, but we have pulled out here a bit to the 4-hour chart so that we can sort of get sort of a broader context here and see exactly what type of damage has been done to the stock with this move lower. So as we can see here, we did quite quickly gap lower here, and we're starting to see some changes in the exponential moving average cluster. In particular, we should point to the fact that, this stock was also was another one of these names that was encountering significant selling pressure starting with the July 11 trading session. For me, this was a major trading session. I think it really kind of set the tone for the remainder of the summer. This is really when all of this downside activity in the market really started to happen. So as we can see here, Google, Alphabet was starting to see some downside at this point, but we did manage to find support at roughly 186.40. But however, the stock continued to grind lower, and then this most recent earnings report did disappoint markets in some ways, and this did ultimately cause this share price gap lower. Overall, listening to the CEO's comments that were made after the earnings release, it seems that a lot of this selling pressure is being generated by the fact that expectations for AI investments are not, are apparently not coming quickly enough for the market. I mean, the market is very fickle and almost childish in some ways because, it wants what it wants right now. And if there's any suggestion that there are going to be delays or that it's going to take some time for certain investments to pay off, the market's already onto some other stock at that point. And the CEO's comments did sort of suggest that it was, we need to invest a lot of money in AI. These things take time. I believe that was a direct quote. These things take time. So the AI investments are not expected to pay off, near term. And as a result, we're starting to see a market reaction here. I mean, you can make the argument that this is not a true fundamental reason to be selling off the company like this, and this is a reason, possibly to start buying in at these lows. So what we'll do here is we'll start to take a look at some of the price levels that will be important to the downside. I mean, as we know, overall in the market, there's a lot of selling pressure that's going on at the moment. No stock has really been immune to this. I mean, we've really seen downside in just about everything. So, currently we can see that the stock did manage to find some support near the 23.6% Fibonacci retracement of its daily trending move. This would have come in at roughly 178.90. And this is also where the rising 100 period exponential moving average rested. That would be this purple line here. So, we did have a confluence of technical indicators in this 178.90 region roughly. We did find a little bit of support here, and prices did manage to see a small bounce into, we can call this roughly 185.20 during the July 23 trading session. But most recently, the market is not responding favorably to this earnings report, even though it wasn't that bad. It was mostly in line with expectations. I think there was a penny miss in the actual result. This was a roughly inline number. The comments were suggested a little bit of delay in the payoff for AI research investments, but there was no drastic negative news. I mean, I do think that more of this is being, more of this selling pressure is coming as a result of, broader sell-offs in the market. Because we're really seeing, pretty much every sector of the market selling off, and a lot of this activity, negative activity, is really being centered in the tech space. So as we can see here, there is a lot of was an upward surge in negative trading volume as this happened. It's a bit mystifying. I mean, this is just a general sentiment type of thing. This is not a major earnings miss or anything like that. I mean, this is the market just trying to play the numbers. And thinking that there was no incredibly great news, so sell things off to the downside. Currently, the stock is trying to find some support here at this 38.2% Fibonacci retracement, which currently comes in. This is roughly 169.60. And as you can see here, we've also got the 200 period exponential moving average coming into contact with this region. This would be this blue line here, rising blue line here. So currently, you can see the candle here. It is red, but we are off of the lows. I mean, we've got a bit of a long wick here. So if you were to move down to the lower time frames, you would see a bit more of a bounce here. Currently, this is a very important level to watch to the downside. I would consider a clear break of this 169.60 level to be a heavily bearish event, because support levels from there start to become much more difficult to find. Currently, we've just broken through prior support levels, which came in at 170.90, and we're already through there. So if we do lose this 38.2% Fibonacci retracement and this 200 period exponential moving average, at the very least, you're looking at a test of 165.70. And then the 50% Fibonacci retracement doesn't come in until 162.30. So you would be looking for a bit of an extension from here if prices are not able to hold this area. We're currently bouncing here a bit on the shorter term time frames. We're off of the lows a bit here. We're trading back into 173.25 at the moment. But we're probably going to need to see some broader support in the technology space as a whole in order for the stock to see a strong turnaround here. If the stock can turn around here, this would be a very strong support level going forward. But if we do see a downside break, some follow through would be likely to be seen. So here's the current market analysis for Alphabet Incorporated, Google parent company, stock ticker GOOG.